Hello everyone, welcome to Concepture Academy. In today's session, we will explore the difference between accounting and finance. Those are two pillars of business understanding and very important concepts. But usually people mix them up as they go side by side, but actually they serve totally different purpose. As the focus of our lecture is to keep everything simple so you can understand it better, so let's start with a simple statement. Accounting keeps the score, finance plays the game. That means that accounting is like a person who records everything that has already happened. It's like a scorekeeper in a sports game, making sure everything is noted correctly and nothing is missed. While on the other hand, finance is like a player in the game. It uses the information from accounting to make smart decisions. So it moves towards future with a better understanding and comprehension of the figures that accounting has recorded. Let's understand it in another way, in terms of money. Accounting is keeping track of money, finance is managing money to plan for the future. Actually, accounting is the process of keeping track of money, recording what comes in and what goes out. Like how much you have earned, how much you have spent, and whether you made a profit or loss. It's like writing in your diary or in your computer system about your business finances. So it helps you know exactly where your money went. While on the other hand, finance is managing the money, it is planning how to use it wisely for the future. Once you know that how much you have, finance helps you to make decisions like saving, investing, or expanding your business. So you can use your money wisely, you can take any decision strategically so that will support your business goals and definitely your money will grow. After having a bit idea about accounting and finance, we can define accounting and finance in a better way for better comprehension. So let's start with accounting. Accounting is the process of recording, classifying, summarizing, and reporting financial transactions with accuracy and compliance. If we see this definition, we can comprehend that accounting is all about ensuring that everything is properly documented, following certain rules, and it reflects the true financial position of the business without any mistake. While on the other hand, finance involves managing that money, investment, and financial planning to support decision making and growth. It involves the decisions related to budgeting, investing, risk management, and strategy. It ensures that everything that has been recorded by accounting, it helps the business to plan, grow, and protect the money. So it actually answers certain questions like, should I save the money to invest it later on, or should I invest it now? Is this the right time to expand, and how can I reduce my financial risks to save and protect my money and to achieve my business objectives and goals in a better way? To make these concepts clear, let's take a very simple example, a lemonade stand, that will help us understand how accounting and finance work in real life, even at very basic level. Suppose there is a student who wants to run a laminate business from his home. He has 1000 rupees as his pocket money. What he has to do is make laminate and sell it. So whether he knows about accounting or not, he will be still using it. He would write down each and every transaction about this mini business. If he will buy lemon, if he will buy sugar or whatever the sales would be, he would note it down. After noting it down, he would classify, group these expenses and income, and after that he would summarize. He will keep all the expenses under one heading of total expenses. In our case, he bought sugar, he bought lemon, so total expenses were 200 and plus 100, 300. He has income of rupees 500 after selling the lemonade. So simply he got the profit of rupees 200. He can do that activity on the weekly basis, monthly basis, whatever the period he has defined. After summarizing it, he will make a simple report like a profit and loss statement for the better comprehension whether the business went in profit or he got any loss in that. In our case, of lemonade stand, he had sales of rupees 500, so he will simply deduct the expenses of rupees 300 to know about the profit figure, that is rupees 200. Same goes with the finance. He will also be using finance in his business. He will do budgeting, investing, risk management, and also he will apply some strategy to grow his business and plan for the future. What he does that before starting the plan about this lemonade stand, as he had rupees 1000, so he would make decision of using rupees 300 only, and he would save rest of the money for future batches. So actually he's allocating money smartly to avoid overspending. He can also take some investment decision on the basis of the accounting information, as if he has a profit of rupees 200, the student can decide to buy a better juicer in rupees 100 so he can make lemonade faster. So he has used the money to grow the business on the basis of accounting information that showed that he has profit of rupees 200. He can also work on risk management. He will protect his money through careful decision making. For example, student thinks if he buys too many lemons and it rains, he won't be able to sell enough to buy. So he buys lemon only for one day to protect himself from any loss. Then finance also focuses on a better strategic planning for the future using the smart financial decisions. For example, he can save a portion rupees 100 for the future needs like buying lemons when prices go up or sales are low, like on the rainy days. Now let's dive a little deeper into how accounting and finance think differently about money. The difference becomes clear when we look at how they treat promises versus actual cash. Well, accounting uses something called the accrual method. That means it records all transactions even if the money hasn't changed hands yet. It includes promises to pay or receive, while finance on the other hand cares only about actual cash, what has been received or spent right now. So we can say accounting records promises, it is based on accruals, while finance follows the cash transactions only. Now again we try to understand this with example of lemonade stand. Imagine this, student sells 10 cups of lemonade, rupees 50 each, so he has earned rupees 500 in total, but 5 customers pay him right now and 5 customers say that they will pay tomorrow. So the cash in his hand is only of rupees 250, while rupees 250 he still owed. So accounting view that is based on accrual says that student has earned 500 rupees today even if someone has not paid him yet. While the finance view says that is based on cash flows that students only receive 250 rupees today, that what matters most, so he has earned only rupees 250 in today's date. You would have an idea about accounting and finance now that how they differ from each other and what their actual purpose is. Let's have a quick comparison of both these terms to recall all the concepts we have learned so far and for the better comprehension. Accounting keeps the track of money, it provides accurate records based on past and present financial activities, and finance uses that information to manage the money. It makes decisions about how to use that money and devise fruitful strategies for the money growth for the business purposes. The tools, of course, used by accounting and finance are different because they have different purpose and focus. In accounting, we use journals, ledgers, trial balance, various type of the financial statements. Softwares are different from finance, while the purpose of finance is on the investment, making budgets, to do forecasts. So it uses various documents and various type of the software that support these type of activities. Definitely professionals are different. Accountants and auditors deal with accounting, while financial analysts and portfolio managers make the fruitful finance decisions for the growth of the money and to achieve organizational or the business goals and objectives. Now to sum it up, we can say accounting provides the foundation and finance builds on it to drive decisions. That was all about accounting versus finance. Thanks for being here and see you in the next lesson. But don't forget to subscribe to Concepture Academy for more clear and simple lessons. Also follow us on Instagram and Facebook, and must leave a comment and tell us what you want to learn next because there are so many concepts that need clarification. bye and happy learning.